All right, let's talk about trading. There's this huge, dangerous myth out there that there's some kind of single best strategy for everyone. But honestly, that's just not true. A strategy that's a goldmine for one person could be a total disaster for you. The real secret? It isn't about finding the winning strategy. It's about finding the one that's a perfect fit for you.
So let's think about it this way. What kind of athlete are you in the market? Are you a sprinter? Super fast, in and out with quick trades? Or maybe you're more of a strategist, carefully planning your moves a few days ahead. Or are you a voyager, patiently setting a course for the long term? Figuring this out is a huge deal because the answer changes absolutely everything.
And here's the thing that so many people get wrong. Success in trading isn't really about mastering the market, not at first anyway. It's about mastering yourself. Yeah, really. It's about making sure your approach lines up perfectly with your personality, your daily schedule, and let's be real, your bank account. So that's what we're going to do. We're going to map out the main paths and find the one that has your name on it.
Okay, first up, let's talk about the market sprinter. This is the day trader. These are the folks who thrive on speed, on intensity. They're all about what's happening right now. They are glued to the market, watching every single price move.
So if we look at the numbers, you get a much clearer picture of the sprint. Day traders are in and out of their positions on the same day. No holding overnight, so no overnight risk. But make no mistake, this is not a hobby. It's a full-time gig. You're literally stuck to your screen. And check out that win rate. It's around 50 to 60%. Basically a coin flip, right? The whole game isn't about landing one huge jackpot. It's about racking up a ton of small, quick wins.
Okay, but here's the first big hurdle, a real gatekeeper. In the US, there's something called the pattern day trader rule. And what it means is, if you make more than 3 day trades within a 5-day window, you have to have a minimum of $25,000 in your account. End of story. Now, this rule is there to protect new traders from high-frequency risk, but it's also a massive financial wall that a lot of people just can't climb over to even get started.
So, you've got this huge financial barrier, but the psychological barrier? It's just as high. We're talking about needing the nerves of a bomb disposal expert and the discipline of a drill sergeant. Seriously. You have to be totally okay with taking small losses over and over again. And when it comes to skills, well, there's no wiggle room. You absolutely have to master reading charts, you got to make decisions in a heartbeat, and your risk management has to be flawless.
All right, so if that high-speed, high-stress world of day trading sounds like, well, a nightmare, let's slow things down a bit. If a day trader is a 100-meter dash, think of a swing trader as more of a tactical 800-meter race. Let's meet the strategist of the market, the swing trader.
And right away, you can see the numbers tell a totally different story. Now we're talking about holding a position for a few days, maybe even a couple of weeks. The goal is to catch one solid swing in the price. This makes it way more manageable if you have a regular 9-to-5 job, right? The focus isn't on tons of tiny profits anymore. It's about getting fewer but more moderate gains.
So what kind of strategies are we talking about here? Well, a big one is trend following. It's pretty much what it sounds like. Find a stock that's on the move and just ride that wave. Then you've got the opposite, counter-trend trading. That's when you see a stock that shot up like a rocket and you bet it's going to come back down to earth a bit. And another popular one is breakout trading. You're watching a stock hit a price ceiling over and over and you buy the second it finally punches through. It's all about spotting the catalyst for a multi-day move.
The whole mindset is different here. It's less about raw speed and way more about strategic patience. The real superpower is resilience. I mean, can you actually hold on to a trade overnight, see it dip a little and not immediately hit the panic button? You need that emotional strength, and you have to pair it with some sharp analysis. It's not enough to just see a price move. You need to understand why it's moving.
And that brings us to our third and final archetype. Meet the position trader. I like to call them the long-term voyagers of the market. They couldn't care less about the daily sprints or even the weekly tactics. Nope. They are navigating the huge, vast oceans of major market trends.
And this is where you can really see the trade-offs. We're talking about holding trades for weeks, months, maybe even longer. That means you're barely looking at the screen every day. But take a look at that win rate. It's the lowest of the bunch. And that's by design. Think of position traders like big game hunters. They're totally fine with missing a bunch of smaller shots because they're waiting for that one massive win that makes it all worthwhile.
So to be this kind of voyager, you need 2 things more than anything else: incredible patience and unshakable conviction. You have to be the kind of person who can watch your trade lose money for weeks and not freak out, because you believe in your long-term analysis. This means you got to do your homework. Really understand the companies, the broader economy, and have the mental strength to just tune out all the daily chatter and noise.
All right, so we've met our 3 archetypes: the sprinter, the strategist, and the voyager. Now let's put them all on one table, side by side. This should make it really easy to see the differences and start thinking about which one sounds most like you.
When you see it all laid out like this, the core trade-offs really pop. Just look at the pattern. As you go from the intense day trader on the left over to the patient position trader on the right, what happens? The time you need, the capital you need, and the stress you're under, it all goes way down. And hey, if you're just starting out, really look at that last row. The learning curve gets so much gentler. There's a reason so many people burn out trying to day trade right off the bat.
So how do you find your fit? Well, it all comes down to a little self-assessment, a 4-point checklist, and you have to be brutally honest with yourself here. First, your lifestyle. Do you have hours to stare at a screen, or are you lucky to get a few minutes a week? Second, risk tolerance. Does a losing trade completely wreck your day, or can you just shrug it off? Third, capital. Seriously, what are you really working with? And finally, your personality. Are you an adrenaline junkie who loves action, or are you more of a patient chess master? Your answers are going to point you towards your natural starting line.
And look, if all this feels like a lot, that's totally normal. Here's a really important piece of wisdom. You don't have to dive into the deep end from day one. So many of the pros, they started out as voyagers or strategists, learning the markets at a much slower pace. It was only after they built up their experience, their confidence, and yeah, their account balance, that they even considered the faster-paced stuff.
You know, this might actually be the most important point of all. Your style is not set in stone. The goal isn't to pick one forever. It's to pick the one that fits you right now. Because as your life changes, as your skills improve, and as your account grows, your trading style should evolve right along with you. The person you are today might start as a voyager, but the person you are in 5 years, you might just be a sprinter.
So the only question left is the one right here. Now that you have the map and you know the different paths, your journey of self-discovery in the markets can start today. Where will you begin?